All right. Well, welcome. Very excited to speak today with Cheryl Kessler. I've known Cheryl for a while now, and Cheryl's a director with CBIZ, bringing Taylor and Zimmer. And I'm going to let Cheryl tell you more about her experience and stuff, because she can explain better her qualifications and stuff. But Cheryl and I have had the opportunity to work on family law cases before, on business valuations, income for support purposes, and that's really what we're going to discuss today. Is how that plays out when there is a business, and what that looks like both on the valuation side and potentially on the support side, and some of the issues that kind of come up even in mediation, because there are, I think, issues that certainly arise with those. So Cheryl, if you can introduce yourself a little more and tell us about your experience with the divorce process.
Yeah, sure. I've been valuing businesses for over 25 years. So I started out in the pure area of business valuation. When I moved to San Diego from Denver in 2003, I started working for Tony Yip, who was with Rochester, Wallace, Spoon and Yip at the time, and started doing quite a bit of divorce work with Tony. And then, finally, I think it was maybe about 10 years ago, I started going out as my own expert in family law matters. And it's, I would say probably, 70% is income for support, and it may or may not involve a business. And then the rest of it is business valuations. It's more Marsden, which is how much of the community residence is community separate property, and also tracing separate property funds into various investments.
Yeah, it's all very interesting and definitely issues that come up. I know that, Cheryl, you work a lot in the litigation process, whether that's as a neutral expert, or whether that's as one of the parties' experts, but also within the mediation process, that some of those are still things that need to be done, whether it's tracing or valuations or the income for support purposes. And I think that on the income for support purposes side, since I know you said that that's the majority of the work you do, kind of start there and talk about that. I think that spousal support in general, and I know that income for support purposes is child support and spousal support, but certainly spousal support is one of the more difficult conversations with divorce, even in mediation. And I think that, first off, I think it's because, as I say, nobody wants to pay support. Doesn't matter who you are, doesn't matter what you do, nobody wants to. Some may realize that they have to, and they will be required to, but it is a difficult conversation in figuring out what that's going to look like. And it's only even more difficult when one spouse is either self-employed or has many different forms of income. So can you talk a little bit about, and we're only going to kind of touch the surface, of course, on things today, but just for anybody who might be interested in the topic and, understand a little more about, how income for support purposes is calculated. Like, what does that term really mean? Because I think that I have clients sometimes who come in and they don't understand, what the support is being even calculated off of.
Yeah, it's kind of funny because a lot of people in the industry throw around income available for support, but that just because you make a gross income of a certain dollar amount doesn't mean it's available to pay support. So I don't know where that current term ever came from. So I like to talk about, gross income for the tax returns, or net income after tax, or you can even talk about cash flow if you want. But I like to try and be a little more exacting with the terms that I use, because it can be very confusing.
Mm-hmm. Yeah. So let's break down some of those terms, because I think that, for some people that might be too basic, but for others, I find that I'm starting at that point. So like when you say, gross income, what do you mean by that?
Yeah. So when I say gross income, if you think of your tax return, what's being reported on your tax return, your total wages are being reported, any rental property income, any business income, that's via a K-1, like if you have a S Corp or LLC investment, and those are all reported on your personal tax return. So as far as, the IRS is concerned, that's they call it adjusted gross income.
Yeah. And then what about your net then? What is the net income looking at?
Yeah, so I mean, the net income is after tax, because just because you make $100,000 a year doesn't mean that that's what you have available to you. So there's the after tax income that you have. And so when there's a computer program that is used by mediators and attorneys and judges called Dissolutions. And Dissolutions is essentially a tax calculator. So you put in your gross income from various sources, and then it calculates, child and spousal support based on, the gross numbers, because it takes into account taxes. But, going back to your question of spousal support, Dissolutions is meant for child support. There are different factors used in spousal support called the 4320 factors based on the code section. And those sections don't say anything about using Dissolutions. It's more of, very broad things. Like the first one is the extent to which the earning capacity of each party is sufficient to maintain the standard of living during marriage. Well, and then you take into account all of these other things. So it's a lot more wishy-washy, which is, why there's a lot of confusion. But, from a mediation perspective, the way I view it is, look at what their actual spendable cash was during marriage, and granted, when you have a couple that divorces, all of a sudden your living expenses go up because you now have two households to maintain. So you basically need more income to have the same standard of living that you had during marriage. So that's a big problem in the divorce context, because the income during marriage may not be enough to maintain the same standard of living when you're now separated. So that's a big disconnect. But, if there's plenty of money to go around, you basically look at, what the spouse that is being supported actually needs to live on. And, also based on looking at, how they live during marriage. So that's the basic concept. And how much is enough is a question for, judges and mediators and people like me to try and figure out.
Yeah, certainly. And I think, you brought up a lot of really great information there. And, Dissolutions for our clients, we actually use family law software. So it's very similar. Family law software does more, but has the kind of Dissolutions formula built into it. But a lot of times clients say, like, I have the question I get often from clients is, well, they think that child support and or spousal should be calculated off of net. And I have to explain that it's the gross, because then, like you said, it's calculating the taxes. But the other thing is it's calculating what it expects the taxes to be on, depending on the information you put into it, right? So I always say that it's only going to be as accurate as the information you're giving it, so that it can calculate that information.
Yeah, that's correct. And I think the other thing is people get very confused in income for support between, the gross numbers that go into, the software that you're talking about, or the Dissolutions software, and cash flow. And I have started in my practice doing a separate cash flow tab when I'm calculating income for support, just as a sanity check, because just because Dissolutions says you should be able to pay X, Y, and Z in child and spousal support, it would be helpful to know what their real after-tax net cash flow is. Because if their net cash flow is less than the child and spousal support they're being asked to pay, that doesn't make sense. So maybe, an adjustment or an exception needs to be made.
Yeah, I think the other thing I run into, and I don't know if you see this, is the understanding of kind of the mandatory versus voluntary deductions that come out of, for somebody who has a paycheck, for somebody who is a W-2 employee, they may be contributing to a 401k, they may be doing an ESOP, an employee stock purchase plan, they may be doing things that they're voluntarily putting money towards. So what I have come up often is clients saying, well, wait a second, you say that, or this shows that my net should be, 15,000 a month, but I'm really only netting 10,000 a month. And it's kind of explaining why that looks that way and the understanding. And I think that goes to the standard of living conversation, because because they were living one way when they were one household, they can't always sustain that going into two households.
Yeah, that's correct. There's so many nuances in just the income part, not even talking about business valuation. Things like, if a business owner owns 100% of their business, and their tax return says 0, but they're living in a $2 million home, clearly there's some personal expenses being run through the business. And so we need to account for those and add those back to income for the purposes of setting support, whether it's child or spousal. And then also just things like, depreciation, which is a non-cash expense, because, the regulations say that you reduce the business income by the expenditures required for the operation of that business. Well, depreciation is not a cash expenditure. Capital expenditures are, because you're actually buying something. Depreciation, you're sometimes buying something, and sometimes it's from prior year purchases.
Yeah, no, that's a good point. And honestly, I find, I don't know if you see this, and especially in mediation, that oftentimes it would be more helpful to have, like you're talking about, calculations done on the income for support purposes side than it is sometimes to have a business valuation, and sometimes both, which we can talk a little bit about, the valuations next. But, the idea that there are often businesses where it is mainly income to them. And a lot of times, like you're saying, they're showing much less on their tax return, even sometimes negative, than how they're living. And I find that the non-business owner spouse has a hard time understanding, well, wait a second, but we've been living in a $2 million home, and we've been, the things we've been doing, but yet the tax returns show this. And so a lot of times it is, I find that's just a conversation and education around what needs to happen there. And then, hopefully working with a professional like yourself who can go through and, look at, well, what personal expenses are being run through the business.
That's correct.
Yeah. Are there common personal expenses you see run through the business, just for anyone who's kind of thinking about what that might look like?
Yes. I mean, the ones that I see in, probably 90% of the businesses are auto expenses. So it's a personal vehicle that they use for business and personal, but frankly, it's mostly personal. And they may write off 100% of it through the business, including their car insurance. They may have, family members on the medical plan that don't work in the business. Meals and entertainment, travel, those kind of things that are really more personal in nature. Another real big one that I see a lot is if the business owner owns the building. They may charge their LLC that owns the building excessive rent, or sometimes not enough rent, which can be a very large adjustment. And then, the final piece is really if they're paying themselves a salary or not,
Mhm.
and if they are, is it a market salary for, being CEO of the company? And so we have to adjust for those things as well. Not so much on the income for support side, but certainly for the business valuation side.
Mhm. Yeah, and I've found it very helpful when I've worked with clients, if you are working with them, to include you in the mediation process, because then you're able to explain the information that we're then able to use in mediation. And hopefully the mediation clients are a little less contentious over the issue, although not always, than I'm sure some of the litigation cases you work on. But
Yeah, I mean, I think it just depends on the situation. And I think anytime there's a lot of personal expenses run through the business, it just gets it tends to get a little more contentious, because there can be a lot of disagreement into, whether those expenses are personal or business.
mhm.
But if the business owner, keeps it to, auto expense, there's usually not as much argument over those expenses.
Yeah, I find and a little bit less, I'm sure we're seeing during COVID, but the travel and the entertainment meals were always the big piece that I found the sticking point to the arguments, because usually they're willing to kind of, like you said, admit some of what they're using for or what they're running as a deduction may not be fully for the business, but it's hard to separate some of that other stuff out, um, that I've seen.
Yeah, and how far do you go claiming something's a business expense? Is having a yacht that you take clients out, is that a necessary business expense? What about the private jet?
Yeah, and it depends on who you
I'm
ask as to
I
whether
mean,
it's
what
necessary.
about the hunting trips, that you may or may not take a client? I mean, it's just, um, it's kind of crazy. what,
Yeah.
what people try and claim, they can do that for the IRS, but, honestly, if it's not a necessary business expense, it shouldn't be deducted for calculating income.
Mhm. Yeah, certainly. And one of the pieces I like best with mediation is that the parties can agree too, right? So, we're not necessarily looking down to the dollar and cents of, what the income is. It's more of a question of, is there a ballpark number, or is there something that you both feel is an accurate representation of that person's income? And then, like you were talking about, the disso master and our family law software will calculate the guideline child support, but then looking at spousal support, what does the cash flow look like? What do they really both have? And I mean, I was working with clients just this morning where it is that situation where, one, there's been some changes in income since the divorce, decrease, but also, I mean, they just, what they're each making right now, they can't support two households at the level they were supporting one. And so, it is often that conversation too around, what is support going to look like so both people can support themselves moving forward.
Yeah, that's correct.
Yeah.
Yeah.
So, and I'd like to also talk a little bit on the business side of things, right? So, if there is a business, can you tell me a little bit about what do you recommend clients should do? Why might a business valuation be important, and when might it be important?
Yeah, so I mean, you need to think about it as far as, what businesses are going to have a lot of value and which ones are not going to have a lot of value. So if you have a business where it's just one person, like a single contractor or a single loan lawyer with their solo practice, there's not going to be a ton of business value. And, the way you can think about it is, if you take the net income per the financial statements and you do a ballpark on the personal expenses and add those back, and then take out market compensation if they worked for somebody else or hired someone to do their job, would there be any money left over?
Hmm.
And if there's not, then there's probably very little goodwill value. So if there's no goodwill value, then you just go to the balance sheet and say, okay, what's the cash and the accounts receivables, and other assets less the liabilities. And you look at the fair market value of those assets, and then what's the net? And then that's called the asset-based approach to valuation.
Mm-hmm.
In the situation where there's no goodwill value.
Mm-hmm.
But that's, really typically for, a solo person, but just because it's a solo person doesn't mean there's no goodwill value. And, an example is there's, CPAs and attorneys in a big law firm have small ownership interest in the big law firm, but as a result of becoming partner, they're making way more money than they would be if they were just hired as a regular employee, CPA or attorney. So their practice might have goodwill value, even though it's just them, just because they're a partner in a large firm.
Mm-hmm.
But the problem is if you don't look at it at all, the value of the business could be as much or more than the value of the house. So how do you possibly split assets when you don't know what the valuation of the different assets are
Mm-hmm.
that the community, has an interest in?
Yeah. And we talk about, no matter how you go through the divorce process, you have to do your financial disclosures. And, you really can't negotiate and kind of make a decision on how are you going to divide assets and debts and what is that going to look like until you've got a full financial picture. And, part of that we were talking about a little bit earlier is gathering statements and is gathering documents and information. And, I think that people don't always realize going into a divorce how much information has to be gathered. And, if they're going to work with you on certain things, it's even more documents than are just, required for, somebody who may not have a business to value or may not be having any tracing issues or support issues like that. But that, we want to make sure we've got all of that financial documentation and disclosures done so that everything's, kind of done on the up and up, I'll say, right? Everyone has all of the information. And so if there is a business and, they're unsure, is there a value to it or is there not, is that, unless they agree, unless they both understand what there is, that, it should be something that's at least looked at. But one of the things that I do often hear from clients, especially those clients in mediation, is like, it's going to be too expensive, right? Especially I find that most of the time the business owner, it's, well, there's no value to my business, right? And, they, say, well, I don't want to spend all this money, to do so. Is there a way for people to do it, more cost efficiently, but still be able to have that information?
Yeah. So, we talked about it a little bit earlier. Step one in a business valuation is to take the net income from financial statements and do the add backs and subtract market compensation to see if there's anything left over. Mm-hmm. So you could do just that step and figure out if it's worth it going through a full business valuation or not. So that step one can be very cost effective, especially if the parties can agree on what the annual personal expenses have been. Mm-hmm. So if they can agree on those add backs and they can agree on a market compensation after we run some reports from our compensation databases, then we can quickly determine if there's business goodwill value and if it makes sense to do a valuation. If there is, additional cash flow above a market comp, then, I can certainly have an idea of what that's going to mean as far as business value, to see if it's worth spending the money. Mm-hmm.
Yeah, I think that's a great, information for people, at least, somewhere to start. because I think that's the concern always is like, okay, are we going to spend the money when it's not worth what we're spending? And then I'm sure, what I was talking about with documents, and we were talking about a little bit earlier, like I said, I imagine the quicker and the easier or the more complete financial documents they can provide you, the more cost efficient that would be as well.
Yes, I mean, the biggest trouble that I run into, and it really is very costly for the clients, is just, getting piecemeal documents. I provide, when I'm going to do an income for support or a business valuation, I provide a one-page list of everything I need. And usually for a business valuation, it's financial statements and tax returns going back 5 years, as well as pay stubs and W-2s and that sort of thing. But for some reason, I don't get it right away. And so we can do part of the valuation, but we can't finish. And then we wait on additional information. And then I'm spending time every week asking the client, where is it? Is it coming? And, sometimes the client just doesn't want to provide it. And so their attorney has to do a motion to compel, and it goes on and on. And so not providing the documents really increases the legal fees and my fees and everybody else's fees. And, that information has to be disclosed. That both parties are entitled to receive that information. So one way or another, typically it's going to come out. And, do you want to spend, a few weeks gathering, or do you want to, dig in your heels and say, I'm not providing it, and then the divorce goes on 5 years later?
Yeah. And the cost, right? I mean,
and the cost.
I like to say to people, would you like to, you're going to, like you said, you're going to have to provide it no matter what. So do you want to do it the easy way and provide that information and, like you said, spend some time and gather it and provide what's being asked? Or if you want to do it the hard way, we're still going to get all the information. So the hard way is just going to take a lot longer and cost a lot more money, because now you've got professionals spending time and effort, which is equal to money that you're going to owe them, trying to get that information. But yet people still dig in their heels. And I'm sure you see that all the time.
All the time, unfortunately.
Yeah. Gosh. So, do you have any advice for clients who either themselves, or if their spouse owns a business, or is kind of unsure what income is, and they're getting divorced? Any advice that you would provide, or that you would say, to things to think about or things to do?
Yeah. So I just would say, certainly if it's just, they have a job and it's just W-2 income, and there's, you don't have restricted stock grants or stock options or anything crazy, it's pretty easy to figure out what income is, because you have pay stubs and W-2s and, nothing else. So you really wouldn't need me for something like that. But anytime you have a business or rental properties, or somebody's trading stocks and bonds on an active basis, or, there's investment income, maybe from separate property. Anytime you start having all these other assets, it can get pretty messy. And it's, I think there's a lot of things that I have to consider when I'm calculating income that the average person wouldn't know about.
Yeah, no, I think that's a good point. And, allows people things that they should think about, and, when to bring other professionals into the process. And, we work collaboratively in mediation with professionals as necessary, right? There's going to be people who don't need those additional pieces and things, time spent, but they're going to be those where they do. And, I think that a lot of times spending a little time and money up front will make the whole process run smoother. And it means that, hopefully long term, you don't run into issues down the road. right? You don't run into those issues where somebody says, well, wait a second, you didn't disclose everything you were supposed to, or I didn't know that you also had income from this source. And, it's really, I always say it is to protect both of the spouses. It's not just about the one, who, either has the income or doesn't. It's about protecting everybody and making sure that the agreements you make are enforceable and stick.
That's correct.
Yeah.
Yeah. And I think one thing to consider when you were talking about cost, hiring a neutral expert, when you're in the mediation process, or even when you're in the litigation process, they call it a 730 neutral expert, can save some money and is a pretty good process, because the neutral expert listens to both sides of the story and tries to make a reasonable, informed decision. However, if the parties are too far off on their version of the story, it may not help, and the neutral is ended up stuck in the middle, and trying to make some decisions when it's not clear whose side of the story is right. Usually neither side is in those cases. So in those situations, if it can't be settled in mediation, then each side might hire their own expert or review expert, and then you end up having 3 experts in the mix, which certainly escalates the cost. So I think if people are being reasonable and they're trying hard at mediation, a neutral expert could be a lower cost and very effective tool, because then you are not in a situation where you have competing expert opinions.
Yeah, certainly. I think that's a good point. Well, Cheryl, I really appreciate you chatting with me today. I know that, sometimes people might think of this as not, I'm sure you don't, but some people might think of the financial stuff as kind of their eyes glaze over, or, not as understandable. But I think it's really important issues and questions that we get often, and want clients to be able to understand what their options are, right? It doesn't have to be just one way, but understanding options to, move through the, mediation process and have all the information that's necessary. So I think that this was, just a starting point, but for people to have a little bit of information as they go into it.
Yeah, I think it's very helpful for people to, especially people that are not financially savvy. I'm very patient at explaining things.
Yeah.
So, just to give them a comfort level that somebody's watching out for, their financial interests, and, trying to make sure that, they get what they're entitled to.
Yeah, certainly. Well, thank you so much. If anyone is interested in learning more about Cheryl, we'll include her information, in the notes as well. But you can, find her, as I mentioned at the beginning. She is a director with CBIZ, bringing Taylor and Zimmer, and you can find more information and her contact info online. So thank you, Cheryl, for joining me.
Oh, you're welcome. Thank you.